Welcome, ladies and gentlemen. Good morning to those in the UK and good evening to those joining us from Australia. My name's Steve Barnes. I am the Commercial Director at the Food and Drink Federation. The Food and Drink Federation is a London-based organisation representing the interests of food and drink manufacturers across the UK. I'm delighted to be here today because we've been working closely with Open to Export and in this instance the Government of Victoria, Australia, to inspire UK food and drink businesses to start exporting or to export more products and services, particularly in this instance to Australia. I thought I'd give you a little bit of a background about the food and drink industry by way of introduction. In the UK, food and drink is the largest manufacturing sector, employing around 400,000 people. In terms of exporting, food and soft drinks exports in 2014 were valued at 12.8 billion, and we saw particularly strong growth in markets outside of the EU. We've just updated the figures to the end of June 2015, and whilst our exports have struggled in the EU, principally because of the strength of the pound against the sharply depreciated euro, we have done very well outside of the EU and delighted that we're still growing sales of food and drink in the Australian market, and we believe there's headway to grow that further. British products are in high demand around the world. If you take value added, it has grown consistently in terms of exports since 2003. We're delighted that British food and drink is seen globally as having tremendous integrity, authenticity, great traceability, and of course, most importantly, fantastic taste and quality. And hopefully today's webinar will convince you that Australia and the state of Victoria in particular is a market worth investing in. We have an excellent lineup today to inform you about the exciting and growing Australian food and drink market. We're going to start off by hearing from Catherine Wu. Catherine is the Investment Director for UK and Europe with the Government of Victoria, and Catherine will introduce some of the food and agribusiness opportunities in the market. We then move on to David Watson, Senior Investment Specialist, Agribusiness and Food for Austrade. David will review Australia's food and agribusiness industry, the projected exports from Australia to Asian markets, and of course that creates opportunities for UK companies on the back of that. Then we will have Alex Freudman, Grocery Manager, Coles Supermarkets, one of Australia's leading supermarkets, and I'm sure well known to many of you. Alex will speak on Australian consumer trends and Coles merchandising strategy with special reference to international products. And our final speaker on the webinar is Andrew Klein. Andrew is partner at Herbert Smith Freehills and will outline key agribusiness investment trends and opportunities in the Australian market and share some very practical and insightful guidance on developing a presence in Australia. So whether your firm is seeking to export, invest or set up in Asia Pacific, we believe Australia has something to offer. So before I hand over to Catherine, I just wanted to make you aware of what we've already done in terms of Open to Export and the food and drink focus in 2015. You can see it on the slide here. If you haven't had a chance to look at any of these webinars or any of this content, there's a landing page on Open to Export, and I would urge you to look at it because there are some great practical hints and tips to help you export more effectively. And please be aware that the Food and Drink Federation is hosting an event on the 19th of October in London, and it'd be great to see as many of you there as possible. If you want any more information on that, please contact me on steve.barnes@fdf.org.uk. I'd be delighted to see you. To remind, if you want to submit a question, you can do that throughout the whole of the webinar. So please use the facility to ask questions, and we will have some time at the end of the webinar to answer those. And before I go any further, I'm delighted to hand over to Catherine Wu from the Government of Victoria, Australia. Catherine.
Hello everyone, and a warm welcome to all participants joining us for this webinar. I'm Catherine Wu of the Victorian Government's London office, and I work with companies to help them enter Australia via a base in Victoria. We're delighted to have such a knowledgeable set of speakers with us today to share their insights on the Australian food industry and paths to market. Thank you to Austrade, Coles and Herbert Smith Freehills, as well as to our webinar partner, the Food and Drink Federation. For those of you not familiar with Victoria, we are located in the southeastern part of Australia. Our capital city, Melbourne, is Australia's fastest growing, and we generate close to a quarter of Australia's GDP with a share of 337.5 billion Australian dollars. Of that, food contributes over 10%, so it's a crucial part of our economy. Our government has identified food as a key future industry, and we're supporting international companies to use Victoria as a hub for their regional business. For us, the opportunity is twofold. Firstly, there's an opportunity for firms to use Victoria as a domestic base for the Australian market, which spends $115 billion per annum on food and has the third fastest growing population in the OECD. And secondly, Victoria is an ideal base from which to export trusted premium goods to consumer markets in Asia, where it's projected there will be 3.5 billion consumers with discretionary spending by 2030. Victoria accounts for over a quarter of Australia's food exports, with China being our largest destination market and growing at 15% per annum to a current 2.7 billion Australian dollars. Now, as context, the UK food exports to China last year totaled £217 million. Key reasons for using Victoria as a base into Asia Pacific are a time zone aligned with Asia, high volumes of trusted agricultural produce, established efficient export infrastructure, including Australia's largest port, the Port of Melbourne, and a high calibre multicultural workforce enhanced by a large international student base from Asia. I'll finish by saying that the opportunities in Australia are exciting, and we've seen huge growth of UK exports to Australia, as Steve mentioned, driven by these factors. Recent UKTI figures show 25% growth of total UK food exports to Australia in the last 24 months, with staggering growth across areas including meat, where there was over 600% growth, dairy with 42% growth, and coffee, tea and spices with 97% growth. The Victorian Government wants to work with British companies to help them access national and regional markets, be it through export, investment or establishment in Victoria. And with that in mind, I look forward to hearing from our speakers. Thank you. And now over to David Watson of Austrade.
Good morning. In this overview session, I'll provide you with a profile of the food supply chain in Australia and then describe briefly some of the key trends and opportunities in the sector. So, starting with a profile of the industry, the visual to use is an hourglass shape. Production is at the top and the consumer is at the bottom. In between, we have processing, transport and retail. Overall, the production and consumer base is highly fragmented. Production is still largely family owned and operated. Processing, transport and retail are by comparison consolidated. Let's take the beef sector as a case study. In the beef industry, there are some 50,000 producers, which is at the top of the hourglass. And then in the middle, it consolidates significantly into about 30 feedlots. There are about 15 processors. Yet at the retail level, amongst the four big retailers, who I will mention, 65% of beef sales in Australia operate through Woolworths and Coles, the two leading retailers. And then at the bottom of the hourglass shape is a very diverse consumer base, which in Australia's case is not only domestic but international. At the processing and manufacturing level, most of the major international players are present, and this level is characterised by a high degree of foreign ownership. There are relatively few ASX-listed food and agri companies, only about 20, because the manufacturing and processing level in Australia is predominantly contained with subsidiaries of multinationals. Now let's look at some data sourced from the Australian Food and Grocery Council, the peak industry food body in Australia, to give you another perspective on the food sector in Australia. At 2014, total turnover in the food and beverage sector was 114 billion Australian dollars. The sector represented 28% of total Australian manufacturing turnover and employed 300,000 people, representing 1/3 of all Australian manufacturing jobs. On the export side, total exports of food and beverage were 27 billion Australian dollars and total imports 28.8 billion Australian dollars, a trade deficit of 1.8 billion dollars. While the production level of the sector is tracking strongly with strong demand from both an investment and trade perspective, the processing area is declining due to increasing costs. A comparative analysis by KPMG and the Australian Food and Grocery Council in June 2014 across 17 food and beverage companies on their financial performance revealed two major findings. First, on an earnings before income and tax level, EBIT, Australian food and beverage companies record a relatively low EBIT mean margin of 7.6% of net sales in financial year 13 versus 14.8% margin attained by international peers. Second, the gap between Australian and international peer profitability has widened over the last 4 years, from just 2% in financial year 10 to 7% in financial year 13. The retail level is consolidated with the traditional players Coles and Woolworths. However, Coles and Woolworths more recently have been joined by international competitors such as Aldi and Costco, who have entered the Australian market strongly. I will let George talk later in the session in more detail about the retail sector in food and beverage in Australia. Turning to trends and opportunities, there is plenty of good news. That is because there's plenty of foreign capital and there is significant interest among foreign investors in the Australian food industry. And that is because the so-called food narrative resonates, particularly with Asian investors. And by that I mean the megatrends of population growth, income growth, increasing urbanisation, and changing food consumption patterns amongst the growing middle class in Asia. The low Australian dollar is certainly helping investor interest, as is low interest rates. And finally, new free trade agreements, which have recently been concluded by the federal government with Japan, China and Korea, are providing significant momentum and incentive for investors to invest in Australian agri-food. And all of those situations lead to strong demand. I will just mention two other trends before we look at the opportunities. The first is that US venture capital firms are starting to explore more closely the ag tech opportunities in Australia. And the second key trend is in relation to the hot sectors, where there is significant interest from investors. And those sectors are the following: beef, dairy, horticulture and aquaculture. And just a quick word on some of those hot sectors. The best example of the beef in the beef sector is JBS's $1.2 billion acquisition of Primo, which is a leading small goods manufacturer in Australia. Again, that transaction was very much around a branded food company exporting into Asia. I'll come back to a case study from dairy. In the horticulture example, there was a major IPO by Costa, Australia's leading fruit and veg company, which went very successfully for them. In aquaculture, Project Sea Dragon is a multi-billion-dollar greenfields project to grow black tiger prawns in the Northern Territory for offtake agreements into Asia. So they're the four hot sectors and some examples of transactionally what is happening in those sectors. Turning to the opportunities, probably the big one is in relation to capturing value by creating integrated supply chains, and there have been a number of developments and case studies that show us what I mean by that. And the first example is the joint venture between Fonterra and Being Mate for infant formula and nutritional milk-based powders. That was a transaction where Fonterra bought 19% of Being Mate stock. Fonterra sold its Victorian facility to a joint venture company which was owned 51% by Being Mate and 49% by Fonterra. Fonterra operates that facility, and there's an offtake agreement between the joint venture company to Being Mate for distribution up into China. So that's a transaction where the economic interests are intertwined between the two joint venture partners. Another example of creating integrated supply chains up into Asia is a recently announced joint venture between CP Group of Thailand with Thomas Foods, which is one of Australia's leading family-owned food manufacturers. That's for the manufacture and export to Asia of meat-based ready meals. Third case study in creating integrated supply chains is around the live export of beef cattle, which is a growing industry in Australia, and there Wellard, which is Australia's largest live exporter of beef cattle, has recently entered into a joint venture with a Chinese distributor, an abattoir operator, for the sale of feeder cattle into China, and that deal was very much based around the recent health protocols that the Australian government signed with the Chinese government for the live export of cattle to China. Another example in the dairy space, a joint venture between Freedom Foods, which is a ASX listed food company, the Perich Group, which is a cornerstone investor in Freedom Foods, and New Hope of China, one of the largest private companies in the food space in China. They have done a joint venture called the Moxie Farms joint venture, where the joint venture will buy new dairy farms, operate existing dairy farms, all for the purpose of selling more milk and dairy products up into China. So there are a couple of examples of a growing opportunity in integrated supply chains into Asia. The second opportunity I would mention is the pursuit of vertical integration, and this is both downstream and upstream. The case studies here in terms of downstream to upstream would be Ferrero, the Italian confectionery company, which recently spent $70 million to buy 2,000 hectares of hazelnut plantation in New South Wales in order to secure supply. The other example is Xenia, the fashion label, which entered into a joint venture in a sheep farm in New South Wales to secure supply of premium wool. The case study in terms of upstream to downstream vertical integration is the Australian agricultural company, a leading Australian beef company, AACo. It has moved from being a traditional beef producer only to, over the last 5 or 10 years, to what they describe themselves as a branded food company. So they now are into processing. They've opened an abattoir about 6 months ago just south of Darwin, and they also now have distribution and consumer brands in both Wagyu beef as well as grass-fed beef. So they are now a fully integrated beef food company. I do want to mention 2 other opportunities that are happening in the agri-food space in Australia at the moment. The first is in relation to online distribution, because there would be a number of companies looking at online sales and distribution into China. It is increasing strongly, particularly for milk powder and dairy products and other food products. And it's especially prevalent into China's 2nd and 3rd tier cities, which are enormous distribution opportunities in themselves. So some examples of companies that are doing this. Well, there's Bellamy's, which is an ASX listed company based in Tasmania, which is very much around nutritional foods for children. JD.com and Youhu Group are 2 Chinese companies looking to do the same in terms of online sales and distribution in China, based off procurement of Australian fresh produce as well as finished packaged food products. Last but not least is Northern Australia. The federal government in Australia is undertaking a major drive for economic development of the North, and the North is defined as the area in Australia above the Tropic of Capricorn. And a key plank of that policy is around investment, both by the public and the private sector in the North, and agribusiness and food is a key part of that economic development. So there is an economic forum to be held in Darwin in early November, and that is an investment forum where many investors all around the world will be coming to examine the opportunities in investment in Northern Australia in agribusiness and food, and there will be specific projects and opportunities showcased at that forum. Thank you. I'll leave the overview at that stage and now hand over to the next speaker. Thank you.
Okay, hello. My name's Alex Freudman from Coles. To introduce myself, I'm the General Manager of Grocery within the Coles business. That means I work within the merchandise function, the function that's responsible for selecting the suppliers we work with, choosing the products we range nationally, negotiating the cost prices, and also setting retail prices, and also selecting which stores those products go into and the location within those stores. You can tell from my accent I'm not Australian. I've been here for 6 years. Previously I was with Tesco in the UK, so I have a reasonable knowledge about the UK market, and hopefully I'm able to help you today by drawing out a few of the differences and a few of the specifics about Australia. So to start off with the Australian market, Australia known historically as some big differences between Australia and the UK is while it seems it's a small country, a 20.2 million population, it is a growing population. So perhaps unlike the UK, Australia is still a country where new towns are being laid down and households are growing. The birth rate is higher than the UK, but also there's high inward immigration, particularly from Southeast Asian countries. So it's a real melting pot in Australia between those of European ancestry to the UK, Mediterranean, and more recently in the that time. And if you look forward to another 10 years to 2025, the population of Australia projected to jump from 24 million today to 28 million and around 11 million households. Now, while it is a very vast continent, the Australian population is very highly urbanised. So the population is concentrated into a number of major cities predominantly. So Sydney and Melbourne between them account for currently around half of the country's population. And add Brisbane and Perth and Adelaide to that list, and that's pretty much all the country and a very highly urbanised nation. So you can service Australia by servicing the major city centres, and that brings you most of the retail volume. I'll come on to more of that. In terms of what's affecting customers in Australia, even though there has been no recession here, and there has been a much lower impact of the financial crisis that afflicted Europe especially, the economic indicators are weakening. So Australia's economy is pegged quite closely to the Chinese economy. So as the Chinese GDP growth has slowed, so has Australia's. So if you look at GDP growth in Australia, has been as high as 8%, more recently growing in around the 2–2.5% region. And you can see that the downward trajectory there is very high awareness of that amongst shoppers in Australia. And also, even though it does have exports, of course, the fact that the Australian dollar is weakening versus the US dollar is affecting consumer confidence. And if I flick to the next slide, you'll see that consumers are spending less. So real wages growth in Australia is actually slowing. If you look at the chart on the left, you can see that it's slower now than it has been for a number of years. And on the right-hand chart, you can see the consumer sentiment, so consumer confidence is actually lower than its 40-year average. And again, it's been on a downward trend for a number of years. So even though there has been no recession here, you would think consumer confidence would be high. In fact, a lot of what you're seeing in the UK in terms of consumer confidence, you're also seeing in Australia. Some broad observations in the way customers behave in this country, though, because though superficially it could look a lot like the UK in terms of the shopping landscape, actually it is quite different in a number of key ways. The first one is Australians over-index in scratch cooking. Now this, I would argue, is a consequence of the Mediterranean heritage and also more recently the Southeast Asian heritage, because they certainly scratch cook on many more occasions a week than the average UK family. The second thing is that there's a much more fresh food awareness than the UK. So Australians, almost all of Australian fresh produce purchased in supermarkets and independent grocers is grown within Australia. Most of the year, in fact, if you were to shop in one of our stores, up to 100% of the fresh produce would be Australian grown. And at certain times of year, that does drop to around 96% overall. But most of what Australians consume is Australian grown. And as such, they're much more aware of seasonality than perhaps we are in the UK. And it being such a vast continent that goes from the south, which has more northern hemisphere, northern European style seasons, to the north of Australia, which is tropical, pretty much you can grow everything in Australia all year round. The next thing is Australians are still much more likely to eat as families than in the UK. So Australians typically sit down to eat as families. I think the number is 4 times a week. Whereas when I was leaving the UK, when I was working at Tesco, that was down to less than 1 time a week. So you can see scratch cooking, fresh food, and eating as families, much more Mediterranean type behaviours than you would see in the UK market. But that all said, Australia is a very indulgent and treating country. So per capita population, it consumes very high amounts of Coca-Cola, for example, of McDonald's, of KFC. This is one of the biggest markets in the world for Cadbury. And in fact, to illustrate the point, it was the Australian Cadbury business that invented Marvellous Creations, which we now know is a major global sub-brand within the Cadbury business. In terms of the grocery market, so we've seen that Australia is a smaller country than the UK in population, but it's important to point out that its retailers, Coles included, are actually quite similar to some of the UK retailers in terms of scale. So the total supermarket market was worth $98 billion in financial year 2015. That's the financial year ended in June just gone. And you can see the reason that the scale is similar to the UK is it's actually quite highly concentrated. So Woolworths, our major competitor, has around 38% share, Coles 31% share, Aldi growing quickly at 8%, and IGA, which is a network of franchised independents, still a reasonable share of also around 8%. And although Costco is here and is growing in share, Costco and the other non-supermarket independents would account for around 15% share of the market. So you can see Coles and Woolworths between them, this is in retail, in supermarket shares, would have around 70% share. So what that means for Coles is that we do touch every part of the Australian continent, and we do touch every household in the country. And our goal is to be the country's best food retailer. So very quickly, this is how the Coles strategy fits in to what we plan to do. So firstly, we are working to build an even better store network. So as the population changes within Australia and there's new towns are built, we have to optimize our store network to go where customers are. We're very focused on freshness. So still more than half of Australian households buy their fresh food in independent stores and markets. So as I said before, very Mediterranean. We're building our own talent base within the company and building great careers. And we're also on a drive to simplicity. So as Australians become more value conscious, we're seeking to reduce the prices we charge, and we're seeking as much as possible to fund that through simplifying our own business. Liquor within Australia is sold not within the supermarkets. It's illegal to sell liquor within supermarket stores, so we sell them in standalone retailers, and we have a mission there to transform our entire liquor offer. We're extending into new channels and services. So much like UK retailers, we have a strong and growing online home delivery service, and we have a financial services business. We also have a very strong loyalty card business, and those would just be 3 examples of successful businesses that we're looking to grow strongly in the next few years. And finally, we're looking to create trusted value. So pricing trust of our business, when the business was acquired by Westfarm as our parent going back 6 years ago, was actually very low. People said they trusted retailers and supermarkets in particular in this country less than they trusted people like insurance companies and banks, which would be, before the financial crisis at least, quite different to the UK. So we're seeking to lower prices every year and create a trusted value platform, which I'll come on to. Actually, Australia before 2009 had around 30 years of retail price inflation. So as you would understand, that would do very little to build pricing trust amongst customers. But since then, as you can see in this chart, the grey bars show by quarter the market-wide measured food price inflation, and the red line in comparison is food and liquor price inflation, or in this case deflation, within Coles. So across the board, from fresh food to packaged food, we've been looking to grow categories, but we've been looking to rebuild customer trust and grow volume by proactively deflating within our total basket. And how we've done that? Well, we've been focusing on fresh, as I mentioned. More than half of Australians still buy their fresh food not in supermarket retailers. That's a huge opportunity for us in terms of the quality of our fresh offer, and everything from meat to seafood to bread to fresh produce. We've worked really hard to improve, and we seek to grow those areas every year by double-digit volume, and we're succeeding in doing so. We also have built ourselves a reputation for having Australia's best promotional program. So an illustration of that here is the front page of a recent catalogue. We print and deliver 6 million catalogues a week to Australian households, and 1 million households a week in Australia still choose where they shop based on the perceived and actual strength of the weekly catalogues of the retailers. So we've built ourselves a strong reputation for having great specials. But perhaps more interestingly, and a bigger change in the market, we've launched a platform we call Everyday. You would know it probably as EDLP, Everyday Low Price, but we've made and built possibly the most valuable marketing platform, and a platform that has the biggest cut through in Australia, which is the platform we call Down Down or Everyday. And we've brought EDLP to the market in a way it never has been before. So to characterize this, our sales and promotions are growing strongly at about 4 or 5%. Our promotions in EDLP are growing at 40%. So it really is the key vehicle for us to build trusted pricing and lower the price of the basket week in, week out for our customers. And we use Everyday across big brands, we use it on own label, we use it in discretionary expandable categories, and we use it in staple categories. It really has a magic all of its own that we use across almost every area of the store. So in numbers, how does Coles fit within that? So I've talked through some of this already. So our total food and liquor sales, 30 billion Australian dollars. So to put that in context, from a volume and sales perspective, allowing for the fact the exchange rate moves around a bit, we are roughly about the same size as Sainsbury's or Asda. We operate 776 supermarkets across the country, and we have total nationwide coverage. And we also operate 662 Coles Express locations, which is our convenience and fuel filling station business. And there's some typical photographs at the top there of what Coles supermarkets look like. So fresh food on the right-hand side, a big focus for us, as you can see in those photographs. And then grocery on the left, where there's a really big focus on innovation, on value, and big abundant displays. In terms of pricing comparisons, the Australian market historically would have been a lot more expensive to shop than the UK market. That gap is narrowing, as I've said, as a consequence of the deflation and also the weakening Australian dollar. So just to show you some examples here, so a 2-litre bottle of Coke or Coke Zero in the UK would cost about £1.90 or about $3.99 Australian. In Australia, the converted price of that would be about £2.12. So we're still a little more expensive, but not hugely so. And in something like a staple like pasta, for example, we would sell that product for $1 in Australia, which would be 45 pence in the UK, which would compare to Tesco, an equivalent product of 59p. So in some cases we're cheaper, in some cases we're about the same. It's becoming a market that's more similar in terms of pricing than it is different. In terms of innovation, we have greatly simplified our range in Coles in the last 5 years, and we've done that to really focus on value and best sellers and take out duplication. But what it's done is it's also opened up space in our stores for us to execute brilliantly on innovation. And one of the key call-outs here is there are whole categories and subcategories in our stores and in this market in general that exist in the UK that just do not exist here, or if they do exist, are just starting. So there are many around the store we could point to, and if you go to Coles online, to our online shopping site, you can browse our aisles online and see what categories do and don't exist. Here's just 4 examples for you. So water enhancers is a category that is literally just launching in Australia, and that's already a big category in the UK. Ready meals barely exists in this market and is very small. Upscale deli-style innovation within salty snacks, again, is just starting to exist here, but what this market would call premium, for example, in crisps, the Brits would say was only mid-tier. And frozen, so frozen entertaining, frozen meals, frozen desserts, very, very underdeveloped market here. And if they do exist, they exist only really in value tiers and mid-tiers. But I would encourage you, go to the Coles website and have a look and see what exists and what doesn't, because there's huge opportunity here to bring new categories to market that don't exist. We're working with many British companies already, as you would expect, so many of them are multinationals who actually operate in Australia, and some are some iconic UK companies who've come to market with us through import, and after building an import base are now building some scale locally. Two examples, so Symington's, many of you will be aware of. These are some of the brands that they've brought to market with us, so Ragu, or Ragoletto as it's called here, Mugshot, Oatburst, The Food Doctor, Peppa Pig, who seems to work on whatever we put her on, and Chicken Tonight. Some of the iconic brands that they've acquired stroke brought to market with us, and they're working very well with us. And Tyrrell's, an iconic British brand of crisps, or chips as we say here. We brought these to market last year on an import basis, and they've recently signed a deal on the back of that volume with a local manufacturer in the Yarra Valley near Melbourne to actually start manufacturing locally within Australia. So we're definitely up for importing, for creating new businesses, and for building some long-term sustainable plans together. And then finally, just in case you're not that familiar with the Australian geography, so we, as you would expect, we ship an awful lot of stock from Europe and from the Far East especially, but also from South America and North America into Australia, and we do it in a variety of different ways. We consolidate in certain ports, we buy FOB and ship ourselves. In some cases we buy on a landed basis where those manufacturers choose to warehouse locally, and we can ship into any of the Australian ports. Most of our volume comes into Melbourne, Sydney, Brisbane or Perth, and from those ports we can de-stuff and service the whole of the Australian continent. And we of course have a distribution network that spans coast to coast using rail and using trucks. And that's it. That's all I have to say. Thank you for listening, and we are absolutely open for business, and we would love to hear more from you, and we're interested in working with you.
Well, hello, my name is Andrew Klein. I'm a partner in the corporate group in Herbert Smith Melbourne, and today we are talking about some of the legal considerations concerning investment in agribusiness in Australia. Obviously, there's a wide range of things we could be talking about today, but in terms of common types of investment, you'll see that we're focusing on interest in an agribusiness company, processor or supplier, perhaps a direct interest in farmland or other rural land, acquiring an interest in agribusiness assets or infrastructure, and other types of joint venture. I've listed on this slide on the right-hand side a number of the issues that will arise, and I'll go into more detail on several of the most pertinent in the course of this presentation. In terms of structuring in Australia, really the top two boxes here are of most pertinence. The first is acquiring an interest in an agribusiness company, and obviously the alternative asset acquisition structure of acquiring assets themselves. Participants might also get involved in joint ventures, which is the bottom box, and I've also mentioned trusts here really because Australia does not have any commonly used tax see-through vehicle other than trust, and so it's very common to encounter trust, particularly unitised trust, as an investment structure in Australia. We're very aware that they're not necessarily used overseas, and it can take some education for foreign buyers coming into Australia to understand the existing structures that might be there. They're not terribly difficult to collapse if necessary, but the basic reason for them being around is tax transparency. So one of the key issues for any foreigner coming to invest in Australia is what we call our Foreign Investment Review Board, or FIRB approval. The first thing to say, and it's in the top right-hand corner of the slide here, is that in the vast majority of cases, approval is granted, and so it becomes really a process that needs to be taken into account in any transaction, but it is not necessarily an impediment to a transaction. The basic rule for most businesses is that the dollar threshold is 252 million and an acquisition of a 15% or more interest. That's the general rule for businesses generally, but in relation to the acquisition of agricultural land, there's been some relatively recent changes, which means that the thresholds have been lowered. So for privately owned foreign investors, they need to get approval for an interest in rural land where the value of that land owned by that foreign person and any associates exceeds 15 million. That's a much lower threshold, obviously, than the 252 previously, and rural land is defined as being land wholly and exclusively used for primary production. There are a few exceptions to this, and are essentially investors who are coming out of countries that have signed free trade agreements with Australia, the US and New Zealand being prime examples, but it does not cover the UK or really any European entities. The other lowering of a threshold, which happened a couple of years ago now but is still relevant, is any acquisitions by foreign governments and state-owned enterprises. The threshold is 0. They have to get FIRB approval. In terms of the implications of this for the transaction process, it's really, as I said, because so many applications get approved, it really becomes a matter of building it into the transaction timetable. Typically, applications are approved within 30 days of the submission being made, but that can be extended. Typically, the circumstances where it'll be extended is where either it's a particularly complex application, or when you run into periods like holiday periods because the bureaucrats will go on holiday, or sometimes the Australian electoral cycle will be relevant because technically the approvals are all signed off by our Treasurer, and if the Treasurer is busy, for example, trying to get re-elected, then it can slow the process down a little bit. Although the turnaround time for FIRB is 30 days, you should also build into the timetable the fact that you need to prepare the application itself, and in practice that often takes a couple of weeks by the time information is gathered and the client makes sure that they're happy with the contents of the application. In terms of conditionality on sale agreements, vendors will often tolerate a FIRB approval as a condition precedent, and that's because so often approval is given. But on the other hand, because it's possible to obtain approval within a relatively short time frame, and that approval being good for 12 months once it's granted, vendors often encourage buyers to go ahead and get their approval before any contract is signed, and obviously that puts the buyer in a kind of a clean contractual position. One thing that's occurred recently in the way FIRB behaves is that it is connecting more with other government departments, particularly the Australian Taxation Office and the Australian Competition and Consumer Commission. So if you're involved in a transaction that involves multiple government departments, we're thinking about the strategy because they will be talking to themselves, talking amongst themselves, and it's important to make sure that if you're going to be talking to one of those arms of the Australian government, that you do it in a coordinated manner. The only other thing to mention in terms of FIRB is it's not directly related to governmental approval, but there's, since 1st July this year, foreign persons have been obliged to register their interests in agricultural land with the Australian Taxation Office, and the purpose of this is try to keep track of basically who owns what. And that's because there was a perceived vacuum of information in that the Australian government was not really able to answer the question, or how much of our agricultural land is owned by foreigners, and so this register is an attempt to keep track of that. I think if you were to talk to the bureaucrats, they would say, and they'd be at pains to say, that this is not intended to be an impediment to foreign ownership, and that's not been our experience so far. It's simply an information gathering exercise. Another key regulator is the Australian Competition and Consumer Commission. So Australia has fairly conventional laws and prohibitions around the merger control, otherwise known as antitrust in the US, and the basic test is that would the acquisition or the transaction be likely to substantially lessen competition in a market? One of the key issues then is defining what the market is, but because of the concentration of a lot of Australian industries, and many are down to duopolies, that can mean that if you have a foreign entrant, they will not have necessarily the same competition concerns and hurdles to get over compared to perhaps an incumbent who's already here. So for foreigners coming into Australia, this can actually be an advantage. It is possible to seek informal merger clearance from the regulator, the Australian Competition and Consumer Commission, before completing a transaction. It's also possible just to go ahead and do the transaction without talking to the ACCC. That run the risks of getting divestiture orders. There's also fairly conventional laws around cartel conduct, anti-competitive behaviour and so forth, so it's worth thinking about those as well. In terms of running a due diligence over an agribusiness business, it's, again, most of the issues are fairly conventional. I've listed a lot of them here on the slide. But just to draw your attention to a couple of things that might be unique to Australia. On the second line there, in relation to assets, we established a few years ago now something called the Personal Property Securities Register. This is a national register of security interests, so it picks up what was in the old parlance charges, fixed and floating charges, but other interests. And so that gives us a means of looking at individual assets and determining whether or not they have encumbrances or other security interests on them. For those of you who are familiar with the system in New Zealand, it's much the same as that, but obviously not quite as embedded because it's relatively new for us. In terms of trading businesses, this can impose an important regulatory step that is worth making sure that you get right, because, of course, in an insolvency situation, it could lead to the loss of stock. The other issues to call out here in terms of due diligence is in relation to property environment, the fourth line there. Just that water rights, licences and allocations are key issues in Australia, particularly as our rainfall is variable and certainly in certain parts of the country. And native title and heritage issues, so again, the potential interests if your transaction involves the acquisition of land. And then the second from the bottom there on employees, just one issue to point out is that if you're looking to employ staff in Australia, we have a fairly strong set of or network of laws that support the rights of the employee. And from an economic point of view, it is worth knowing that there is a 9.5% compulsory pension contribution arrangement, so that should be factored in to any calculations around the cost of employees. Moving ahead to taxes, by no means am I a tax expert, and I will not dwell on this slide unduly. Just a couple of things to call out though. Australia has a consumption tax, that's the fourth bullet point there. We call it Goods and Services Tax, or GST, and that runs at 10%. I know that's not nearly as high as some of the European consumption taxes, but nonetheless it's something to take into account. The other is stamp duty and payroll tax, particularly stamp duty. So these are actually taxes that are levied at a state level. The other taxes listed here, like income tax, are actually levied at a federal level. And the state governments do not have a great number of sources of revenue. And for that reason, stamp duty, although it was rolled back a little bit once the GST was introduced, is still a key source of revenue for the state governments. And what that means is when you're purchasing assets, it is, and particularly, say, real estate, there could be a relatively high, on a sort of international level, a relatively high transaction tax applied. Thankfully, the stamp duty applicable to the transfer of shares has been abolished in most states other than New South Wales. But certainly stamp duty is a meaningful transaction tax that needs to be taken into account. In terms of ongoing taxes, you've got a payroll tax, again a state level tax, which is literally a tax on the payroll, land tax for holders of land, and then rates, which is really more sort of at a council level. I won't dwell on that further other than just call out some of the taxes that might be slightly unusual compared to what you might find in the US, the UK. In terms of employment laws, I mentioned earlier we have a fairly strong and supportive arrangement for employees. There are minimum conditions relating to pay, working hours, annual leave, parental leave. I've mentioned previously the compulsory, what we call superannuation, or otherwise known as pension contributions, 9.5% of employees' ordinary time earnings. The other key thing to mention is that over the last 20 years, the number of defined benefit schemes is now very, very small. So really most contributions are made to defined contribution schemes, and from a transaction point of view, you then don't have to worry about making actuarial analysis of the assets of the fund, and most of the funds are third-party funds not run by corporates themselves anymore. We have a strong workers' compensation arrangements. They vary from state to state because they're regulated at that level. That is another, like stamp duty, is a good example of the fact that if you come to do business in Australia, you have to accept that a lot of laws are imposed at a state level, meaning that sometimes if you've got a national business, you have to answer any particular question 7 or 8 times because the laws might vary from state to state. Strong unfair dismissal arrangements, strong focus on occupational health and safety, a relatively strong union movement, so it's again always worth, and it depends from industry to industry, but it is always worth asking that question, of course, of due diligence. And we do not have a particularly friendly or welcoming way of bringing in temporary or foreign employees, so our visa system is relatively strong. I think then, in terms of a very quick overview of things to look at if you're trying to do joint ventures or acquisitions in Australia, that's a fair overview of some of the key issues. Obviously there are a lot more, but in the time available I thought that they are probably the key ones. And I'd therefore like to wind up and just thank you all very much for your attention and hand back to Catherine. So thank you again for your time.
Well, thank you very much to our speakers for their contributions to today's webinar. Before I hand the floor back to Steve, a couple of points from me on behalf of Victoria. If you're interested in investigating Australia further, then I'd suggest 2 next steps. Firstly, get in touch with the team here in London. We can provide you with no-cost confidential support services outlined on this slide, and you'll also see my details there. Secondly, we're running a series of inbound missions to Melbourne over the next year to allow international importers, exporters and investors to visit Victoria and see, touch and speak with Australia's food industry in person. Our next inbound mission will be Victoria's annual Food and Beverage Trade Week from the 27th to the 30th of October. Most on-the-ground costs will be covered for successful applicants, including accommodation and breakfast for 5 nights, a tailored visit program, business matching, program-related meals, and entry to the Victorian Food Showcase. So please go to the link listed for further information or to register. And alternatively, if you're not able to make these dates but you're interested in future events, then do get in touch with us to ensure that we keep you posted as the schedule for 2016 rolls out. And again, you'll find my email details there. Thanks so much.
Thank you very much, Catherine. That's fantastic, and what a chance to visit Melbourne. And for any of you who are interested in Australia and exporting food and drink to the market, I would take up that opportunity as quickly as you can, because it sounds absolutely fantastic. I hope you all agree that we have covered an enormous amount of ground over the last 40 minutes or so, and I'm absolutely delighted at the input and the insight we've had from speakers, from Catherine herself, from David, from Alex, and from Andrew. I already see some questions arriving, and I would urge you, if you have any questions, to pose them as soon as you can. What we intend to do now is to run the question and answer session for a further 10 minutes, at which point the webinar actually automatically draws to a close. But we will get back on any questions that you've asked that we haven't had a chance to answer as yet. So all it leaves me to do is to thank the speakers once again, and also to thank you very much for your participation this morning, and hopefully we'll see you again soon. Thank you.